Intel posted shocking guidance on its earnings release last night that stunned investors and has sent the stock plunging. The legendary tech company also missed Wall Street's expectations for the fourth quarter, with its forecast pointing to more trouble ahead. And I think if you roll back the tape to how we discussed Intel 3 months ago, we will have used the same language, just wow. And it wasn't just the weakness in the quarter, the company operating, just really missing on earnings. It was also this outlook and this sense coming off this earnings call that things are not going to get better for Intel this current quarter, the next quarter, or maybe any quarter this year. And it just, I think, signifies just the continued struggles and the transformation that Pat Gelsinger has to drive here to catch up to the likes of an AMD, NVIDIA, you name it.
Yeah, break out the mullet wigs, if you will, because that was certainly talked about on the earnings call. And, of course, this is the mullet trade that we had talked about with Jefferies analyst Brent Thill once before, and this kind of business in the front, party in the back. But it's a big question for Intel because there are other factors that are impacting them a little bit more outsized than the rest of the market, which we'll break down. But what they said on the call is that they're expecting more positive expectation for the second half of the year. And some of that is revolving around a recovery in China as well. But in the near term, profit margins, those gross margins of 39%, well off of what investors had come to expect for almost a decade of roughly 60% in that same category.
It might be coming, but they were so uncertain that second half recovery is coming. They didn't even give a forecast, right? Yeah. And I think you really have to parse Gelsinger's language here. He said the possibility of second half improvements. There is not really any optimism baked into this. And the other interesting thing that caught my eye from the call, the head of investor relations saying that the first quarter is going to be the most significant inventory decline in our customers that we've seen in recent history. And that has to do especially with the PC business. And the company said PC sales this year are going to be at the low end of their forecast. But also, you and I were talking about this morning, Saz, the data center business, which had been a growth driver for the company, is also not doing great.
Yeah, data center, key margin driving segment for Intel, and they continue to lose market share to the likes of an AMD. And I think this is going to be another just turnaround or transformation year for Intel. And they've acknowledged that they may not gain leadership in the chip space until 2025. So what happens in between there? Now, there is one comment I'm not seeing get talked about, but they mentioned this on the earnings call last night. I think it was Pat talking about they're looking at other value-creating initiatives over at Intel. That definitely rose my spidey sense. Unclear what that actually entails, but is it more cost-cutting? This is a company that just 3 months ago outlined $10 billion in cost cuts through 2025. So it's unclear to me what else could be under that umbrella.
Yeah, in terms of initiatives, they mentioned some of the initiatives that are underway, trying to improve the gross margins, $3 billion in reductions that they had talked about for 2023, and $1 billion of that is in the cost of sales. So that could parse back to, or at least relate back to, that cost of sales or that headcount reduction that you're talking about as well.
And I'll just quickly add here, too, before we go on into another angle, is I just don't think this is Pat's issue per se. I think this reflects really decades of just mismanagement at Intel. Now,
we're going to talk about it. Can we talk? Yeah, let's pivot for a minute, okay? As Intel does continue to stumble and warn of more trouble ahead, some of its rivals in the semiconductor space are picking up speed. Two big winners off of Intel's market share losses, Taiwan Semiconductor and AMD, both who have been taking business away from Intel quarter after quarter. Now, let's talk about why that has been happening, because every chip maker, right, is suffering from these macro headwinds that we've talked about, including AMD and TSM to some degree. Intel seems to be suffering the most, and that gets to what you're talking about, Saz, which is what is different? What are some of the missteps that Intel has made that have brought us to this point?
It's something as simple as, well, maybe two different things. First, AMD has been a beast over the past decade, especially under CEO Dr. Lisa Su. NVIDIA has been a beast under Jensen Huang. You know, and Intel, I go back to when Bob Swan was leading, before Pat, and leaders before that. I mean, it went as so far as they removed, I believe, key performance indicators. You essentially had executives not just driving accountability throughout the organization, and then over time that really helped them or led to them losing market share and putting out really best-in-class products here. So Pat was brought in, I believe, over 2 years ago to help turn this thing around, and a transformation of an iconic manufacturer like this does not happen overnight. So just to hear Intel say 2025 is when they become a leader again and compete with an AMD and its various other competitors, I think is very telling. It takes a while to turn a ship like this around.
Right, and it's going to have to come on more spending, which is going to compress margins even more. When they entered into this $30 billion, multi-billion dollar partnership, not just with Brookfield, but other partners as well, to try and bring up their foundry services, to try to be able to produce and bring online more capacity. That's more money out the door for Intel. And then where does that continue to have to move forward? They've got to continue to source materials to bring into those different operations. And that is a 5-year lead time, at least, by the time you not just break ground, open up the capacity, and then additionally start to ship out to partners, and then investors start to recognize that. And so I think investors are trying to, as best they can, get ahead of this wave of spending that Intel is going to have to do in the near term. That makes some of the other players more viable as investment opportunities, perhaps. And that's why you see over the past 5 years an AMD soaring by about 500% in its stock price and its share value, while Intel over the past 5 years is down by about 34%.
Well, and it also illustrates why Intel has so much work to do to catch up with it. I mean, because all AMD needs to do is keep doing what it's been doing. Yeah. Intel needs to really get a big step up here. And I don't think that there's, from an execution perspective, it doesn't seem like the likes of an AMD or some of the other chip makers are wavering, even though obviously we are in where we are in this glut environment for the chip industry.
Right. What AMD unveiled at CES a couple of weeks ago is incredibly impressive, and is likely to keep AMD as a market share gainer.